Hey guys, it's Brian. Just wanted to do a quick recap over here. We talked a little bit this morning about breakouts. I talked about it yesterday, talked about it again this morning. This morning we talked about the CAD yen over here as a potential breakout opportunity. I had been trading in this range right here, about 10 pip range. And we just mentioned the fact that when you see something like that, it's a great opportunity for something to actually move. We don't know when it's going to move. We don't know what way it's going to move. But we know something typically has a range of 40 or 50 pips, and it's trading in, 10 or this morning it was a 17 pip range. But we can see that the real range was right about within this 10 pip area. It's going to move. It's just reversion back to the mean. Something's going to happen. And later on into the day, we did see something actually happen. We started to see price moving up, broke through that range, and I went ahead and I activated the breakout box, took a buy on this, and we've come within probably a pip, probably a pip or so of realizing the profit on this. You can see we've been ratcheting off risk as the trade moves in our favor. So, even if it does from here come back and stop us out, excuse me, I've got something going on in my throat. It'll be a nearly a break-even trade at this point. But it just adds to the fact that, when you use a strategy like this, you're giving yourself an opportunity to consistently win more than you lose. We also talked about the same thing over here on crypto, right? Crypto, Ethereum, Bitcoin, very volatile currencies. We talked about, the fact that on an M15 especially, ETH had been in a really tight range, sitting right here, in a very tight range. We talked about, just, hey, look, when you see a range setting up like this and it's been trading within a range like that for quite some time, you can set yourself a buy stop and a sell stop, above and below that range has been trading in, and then wait for it to break and move. So again, today, depending on how you would have set that up for your range, you might have realized a pretty nice profit on that trade. Now, look, just some real life examples following up on something that we talked about earlier today. This does not work like any strategy. It's not 100% winners. I don't want to give the impression that you're always going to win your trades this way. You're not. But when you trade with a very simple method like this and use responsible amounts of risk when you enter the trades, you give yourself an opportunity for a trading plan that you can repeat day in, day out, and you can be consistent with it. And the first step to becoming a consistent trader is to have a consistent plan that gives you a mathematical advantage in the marketplace. So again, the reason that a strategy like this works is my risk to reward ratio is 1-to-1. And then every time price moves in my favor, I'm ratcheting off risk that amount. So ultimately, in the long run, even if I have trades that move for me significantly and then come back, I'm being stopped out and I'm losing much less than my average win. My average win is going to be fixed, right? Let's say I'm using a 1% risk. My average win is going to be fixed at a 1% profit, but my average loss, because I'm always ratcheting off risk, is going to be less than 1%. So I'm winning 1%, but I'm losing less than 1%. So if I'm right 50% of the time, you can flip a coin. If you're right 50% of the time, you're going to come out ahead in the long run. Now then there's things you can do to give yourself a little more advantage over that. Trading with the trend, looking at certain market conditions and looking at where price is in relation to price action, looking at where price is in relation to support and resistance, looking at the 4-hour trend and the 30-minute trend, and trading in the direction of that trend. There's a lot of things that you can do to stack the odds a little bit more in your favor, but just understand that every time you add some sort of a filter or an indicator or a measure like that, you're making the plan slightly more complicated. Be prepared that as you complicate the plan in slight ways, you're going to trade less, and that's okay. There's nothing wrong with that. Just have to be prepared for that, right? So anyway, long and short of it is, I wanted to do a quick recap videos so that you can see kind of the things that we had talked about earlier today and yesterday put into action in real time, and see actual results of how that very, very, very simple trading plan can function. So there it is. I do owe you, and I had the person's name up a moment ago, and I closed that tab. I will put the breakout box out for you. I just need to do a training session around it, around a basic use of the strategy, installation process, use of the indicator itself or the expert advisor itself, and then we can go from there. So I'll notify you here on Facebook and also via email when that breakout EA and strategy is ready for you. But anyway, that's it for now. Just wanted to follow up and recap, and just let you keep in mind that we don't have to complicate things in order to be a successful trader. For me personally, I've found that the less complicated we can make something, the more apt we are to stick with that method. And as long as it gives us a mathematical advantage in the marketplace, that's going to give us that long-term trading success that we're all seeking and looking for. So there it is. Have a great day.